Hello friends, this is Martin from CK, the channel for learning about trading and investing. Welcome to Daily Market Analysis Show. Markets tomorrow, where we look at what happened in the markets during the day and how we can plan for a better trade for the next day. Remember, this is analysis for February 17, 2022. So the market actually, faced resistance, as you might have, noticed. So what exactly happened? Let's get in and see and analyze and see what the charts are saying. So as usual, the pre-market analysis is for the expiry day tomorrow, Thursday, Feb 17, and we will be doing that based on all of these parameters that you see on the screen, right? It will be charts and data analysis both, and we'll have some actionables and we'll wrap up us. So this is the chart that you see here, and yesterday's what the unusual bounce that happened, big move of 500 plus points, and normally after big such moves there will be some consolidation, some small pullback, some pause could be there even if it is bullish, right? Because it needs a breather. So that's exactly what I would assume that happened. It hit the resistance zone of the moving average here, and here also previous resistance it faced. The gap was filled. However, you can see that there's a gap between the previous two bearish candles. That gap got filled in Nifty and Bank Nifty also. If you consider the wick, gap is almost filled. It's still left to the body of the candle. You can say that it is still not filled. But wick, if you consider, normally wick is considered. So the gap is filled on both. So once the gap is filled, it's no longer resistance. So, but it could not close before and created a bull trap. Bull trap is when the price moves above the previous day's highs and then close below the below that. Same happened. The price went and above the previous candle's high and then closed below it. So bull trap is normally trapping the bulls who thought when the previous day's highs closed that it will go up. Didn't happen. Actually, it was very volatile. Basically, we'll see that in the next slides. So that's what happened. Right, it was a flat close in the Nifty. You can say 0.5% down, red close, kind of flat close in Bank Nifty also. Right, 216 points lost, 30 points only lost in Nifty. So it is a bull trap day if you look at the candles on both indices on the daily short term, right? So yesterday's gap also closes. The intraday is what interesting. Look at what happened. It's a V-shaped move that happened on Nifty. V-shaped move, right? Down, up, down. It's two V's are there. One is inverted V, and very difficult to trade such intraday and positional. People get fried. Whoever is going short will suddenly realize that it's a reversal happening. Whoever is going long suddenly finds that there is a reversal happening from there. There also both short and long will have difficulty in adjusting the position, especially in the derivatives and options if you do it. Exactly the same thing happened in the Bank Nifty also. This is a 600 point range where it was doing this zigzag circus. Bank Nifty, the range was around 200 points or something, right? In that range the circus happened. So that's the kind of highly volatile action that happened today. When highly volatile means there will be big fight with bulls and the bears. And finally the bears kind of won today because it trapped the bulls. So Bollinger Bands, if you see that, there is something interesting that's Nifty. That is the volatility skews is slowly happening, right? So the width of the band, distance between the bands have slightly it's reducing. That means there's a chance that volatility may not shoot that much as it used to happen. I used to do it last week. Slight skews has happened, but overall it's a sideways indication that it's showing. Slight bearish result because it could not hold the 20 moving average close. Bank Nifty, the volatility was anywhere less. Some expansion is seeing on both sides. That means Bank Nifty is ready to move somewhere. A slight bearishness also has come because it gave up the close about 20 moving average. Right? So relatively less volatile Bank Nifty in a sideways short-term move, and relatively higher volatile sideways momentum, sideways move. Price action is what we are seeing short term in the Nifty. Support resistance levels, making out of that levels. Resistance right now it's seen at 17,350, 400 that range. If that's taken out, then you have 17,500 and 7,600 Fibonacci retracement level 23, I think. And if that is also taken, then you have 17,800, 850 level, which is also previous resistance. Downside support first would be seen at 17,200, 17,300. If that's gone, then 17,000 level If that is also gone, then come to the Fibonacci 38, which is 16,800 and 16,900, that range. If that is also gone, then you go to 16,700, 750, then 16,550, 650, and then 16,450, Fibonacci 50. Similarly, the bank in the right side, you can see the resistance level is at 38,000 right now. Right, support is seen below. When resistance above that is 38,500, above that it is 39,000, then above that it is 39,500, and then 40,000, like that. Major resistance. Support seen at 37,800 range, and then if that's gone, then you have 37,400, which is the Fibonacci 23 retracement level, and then if that is also gone, then you have 37,000 level. That is also gone, then you have 36,700, which is Fibonacci 38. That is all the supports and resistance for the Bank Nifty. Moving on to the momentum and divergences, you can see the overall sideways momentum very clearly, right? Nifty left side is saying that momentum is sideways. One is also in sideways in the Bank Nifty also. Medium term also, this is the daily chart that is saying. Medium term also, it is sideways. And divergences, no more divergence in the Bank Nifty or the Nifty. One divergence was there, which had met its targets when it dipped to the 17,000 kind of levels the other day, right? So that divergence worked out well on the downside, but as of now there is no other divergence seen. It's sideways movement that's happening, medium term and short term. Trend is bearish still, but with less weak strength. With weak trend strength, it is bearish. That's what Nifty is. Similarly, Bank Nifty also weak strength, weakly bearish, you can say, both on a short term time frame. Looking at the volatility, India VIX went flat, nothing which happened, almost same level as it closed yesterday, 20.59. While volatility is 21.71, and IVP also is still at very high level of 85 plus. Volatility is about 20, so we have to be cautious. Open interest analysis showing that for tomorrow's expiry, lot of call writing has happened in this zone. You can see that, right? But call unwinding much has happened. Of Nifty it has happened slightly, but otherwise it's a dominating bearish. Higher contracts are the resistance is more. You can see basically call rating is more. Larger number of contracts in the call rating. Sellers are thinking that it is better to sell the calls and write than sell the puts. And that's what they have done. Look at the range for tomorrow. 500-point range of 17,000 and 7,500 is what people think. So highest call rating is in 7,500, put rating 17,000. 16,500 also has got good put rating. 18,000 after that has got 18,000 is so far away. Still it has got good resistant rating. And Bank Nifty, you see the ranges 36,000 and 32,500 points. Maximum call rating is in it. Those points 38,500 and 39,000 also has got good call rating. Resistance is seen there also. 38,000 also has got good put rating. That means supports are seen there. 0.78 is the same put call ratio at both places. It's not very bullish. Short buildup is exactly what happened in the future of interest data. Right? So, futures. So that's about the future and the options of interest data analysis. Correlate these levels with the chart support and resistance level that we have seen, and then you can come to a conclusion where we have to make the entry or exit or pyramid or do whatever at these price points when the different levels breach, right? Now this is the heat map that you see. It's kind of neither that this none of the heavyweights are showing except HDFC, or none of those heavyweights are in Kotak Bank also. Other than that, it was kind of a mixture of green and slightly green and then slightly red kind of. So pharma and energy is only sectors. Major sectors in financial service has to perform for the market more. Financial and then IT both are not performing, market will be down. FMCG also not perform. Pharma performed. Heavyweights analysis, if you see, it was red day, so naturally all the heavyweights will be red. But HDFC Bank, you can see it is at a major resistance zone, breakout zone. So once it moves above, the market also moves. HDFC had fallen back from the major support zone and it is trying to climb back. It was a green close today. That's what you see here. HDFC Bank was the only heavyweight that is seemed to have been going along with Kotak Bank. So that's HDFC may be reverting back, but HDFC Bank is stronger than the HDFC. Now Reliance Industries also is kind of showing some bullish. But remember that HDFC is still having a bearish momentum. It has not climbed up into the bearish zone. HDFC Bank is on the sideways momentum. Reliance lines is also sideways momentum only, but it is showing some red is on the neckline of the rounding pattern, cup and handle pattern. So, and it is well within it. So what you need to observe is whether this is going to move further within this channel like that zigzag, or is it going to break out to the cup and handle. That's something else. So if there is, just you have to draw a trend line between these two top, and whenever there is a breach, there is a chance that it may be a cup and handle breakdown, which is normally powerful, or it could keep on consolidating like this for several weeks or months also, and then break out. Any of this can happen. So you just have to keep this on radar glance, and HDFC also, because that is also a cup and handle. When first is consolidating, it continue consolidating after a big, long vertical up moves that happened for several months after the COVID. So it's sideways momentum and then taking sideways support and then consolidating. So it may, the moment it is coming out and breaking out of this, so it may not happen nearly, but because the US markets are down, obviously IT will not be, not move up. HSBC Bank is also kind of bearish. The day was bearish, but sideways momentum, and Kodak Bank is also sideways momentum, and it is green, but today was close was green. It is trying to come up. There are a lot of resistance marked at these places, right? So TC is also kind of consolidation, red close with momentum sideways, right? But it's in a parallel channel, so whenever it is moving up, we know where all it can move. There is a resistance zone also where it had retraced last time, so make a note of that. So let's say it moves in sectoral performance. We'll just quickly go through. Overall, IT was flat down, metal was flat, 0.5% down, auto was flat, 0.5% nearly down, pharma sector closed up. FMCG also slightly flattish up. Realty also up. So realty pharma and that FMCG did not go down, but all of this have got sideways momentum. So ideas are to move to the bullish zones before you can pick up in stocks. Institutional selling again, the Fyers continue to sell in there is non-stop selling that is happening from the FI side, and DIS did not buy as much big as it had done yesterday, but DI did buy 1180 crores in the cash market. Equal amount of selling happened from the FI side. That's why market went down. If FI had not, forget about buying. If FI did not buy, did not sell, then only market would have automatically gone up. The FIs are selling whatever the DIs are buying. That's what is happening, and FI is continuously selling. Not a single day of buy is happening. That's a concern, and so one good thing is that dollar is cooled off and rupee has strengthened. It has fallen off from that major resistance zone, and after attempting to break out of the channel top, didn't happen. Momentum also slipped sideways. Dollar also is kind of consolidating. Dollar index. So oil is the danger man. So that is what is shooting up above the 91, 92 kind of levels within the channel with great momentum, and there is a divergence also indicated that there is every chance that it can go to 100 levels. This is a bullish reverse momentum divergence, which can it has a lot of scope to go further up. So it is what charts are showing. Now here you see that gold has again hit the resistance and fallen back to the channel top. So the attempt to break out this 1876 did not work out as usual. Several attempts have has been happening in the gold since last 2 years to break out of this zone. Same thing happened, it did not work out. But today it attempted again. It seems to be trying to attempt again, and the momentum has made a range shift from the sideways into the bullish zones. That is actually very bullish. Although it is trying to move up and then taking a support of the at the bull zones, and then again moving up means it's bullish. So there may be a chance that it can again move up. But if gold is breaking out and moving means definitely market may be crashing. Okay? Probably. So yeah, US markets, Dow Jones showed some green, other Nasdaq and S&P 500 also showed green the other day. So it's kind of sideways momentum for all of them, and then it has not yet breached the support zones, and the trend line channels are also intact as of now on both the indices. Also the US market is showing some kind of green. It is not that bearish, at least for yesterday, but you'll have to see whether that's the same tomorrow morning when our markets open or not. Depending on that, SGX will reflect that bearishness obviously, and accordingly our market also. If it is a big move, it will work in the same way. No, small move means you never know. Actionable one, only one actionable Mahindra Life Spaces. kind of very volatile moves are happening, right? But there is some consolidation, and this may be a flag, pollen flag, which can give more further upside. The market may be consolidating, profit booking may be happening. So this seems to be a breakout that has happened from a previous resistance zone. So momentum is great on both time frames, and both time frames is short and medium, and trend is also good, and volumes are extremely good. But some profit booking has definitely happened, and this after that is how over, there may be breakout that can happen. So if you watch for that and then catch it at the right place, you may be able to get swing trades. And the problem is that short term is still neutral, because one day it goes 500 points down, next day it goes another 500 points up, and the next day it is pausing. So you can't get a clear trend direction. So based on the chart pattern, support resistance, sideways momentum, and the bearish trend continuing, I'm taking a neutral position because I don't know whether it's going to be bullish or bearish. That's kind of movement. The sideways market, it happens like that, and that too with the high volatility. That's how it is. Yeah, the first line is a mistake. This market recovered was yesterday's point. Market did recover yesterday, but today it was unable to sustain due to resistance on the top. That's what exactly happened. That also adds up to the reason why it is neutral. But still, it is flat. It did not collapse. That's why it's neutral. The US market is showing some greenery, but it's a lot of uncertainty in the market because of inflation, tapering, interest rate hikes, and all of this, along with the Ukraine war, Russia war, all that uncertainty is there. So even if it is a green close today, you never know what is there next morning. So there is every chance of high volatility according to the escalation of the war crisis. So market can be very, very volatile, until there is some clarity that emerges out of the crisis that's going on. Right? So volatility is still about 20. That is the reason. The fear and greed is there is free. Fear in the market is what India is about 20 means. Right? Some troop withdrawal happened, but some say it does not happen. So uncertainty is what market does not like, and that's how market is reacting like this. Institution selling continues. As I said, it's very bad thing. They never stop. Right? So that remains to be a concern. Right? Positive factor is that it had a very, very, very bullish recovery that happened yesterday. Right? So that's only positive, and banks are showing more strength. And bank financial services is a major part of the index, so that's showing strength. And staying away if it is above 20 is the best for if you're not a very professional trader. Right? That is strategy number one, and it also is a time for sapping more picks and good quality stocks. Option setups and setups should consider taking. This is a repetition last sentence. So taking hedge positions today also demonstrate the need for that, because we have one V shape in the market went up, down, then again up, down. So that kind of moments, you never know when even if you feel that the trend is established on a shorter time frame, it may not have actually established. Sell-off happens at particular points, and then market reverses, and again people are waiting to buy happen. So such kind of volatile markets, you should have your risk defined. Keep tight stop losses if you're doing intraday, and head your positions with option strategies, various available strategies if you are carrying forward, because the next day morning how it is going to react nobody knows. Right. So define your risk now. So exactly at least your capital is not wiped out. So that's a view. Today also another neutral day. For is what I look forward as a market view, and you can have a different view on your own. But I think this analysis may help you some way to frame your own independent market view and also your trade plan for the next day. Right. If it helps, if you consider that it helps, then consider hitting the like button. Also, we have very few subscriptions, and your help in this regard will be very motivating. Thanks a lot for being happy trading. Have a learning. Bye.